We're going to do a little summary of what we did last session about budgeting, and then we're going to go into a little overview of taxes. And I need to give my disclaimer that I am not a tax consultant. I am not a tax expert. It's just an overview from the business perspective of where you're going to get taxes and how more or less how it works. But if you have any questions about taxes, I recommend that you talk to your accountant or to a tax expert. Also, I know someone here, I think is Millen, that has a lot of experience with taxes, so you can help me guide the class a little bit. But so to start a little bit with what we went over last week, let me just pull up my screen. And we talked a little bit about the importance of budgeting. And obviously, this is and this is just an exercise, an example that if you track every month your and I'm Excel is a friend to this kind of projects, because many times QuickBooks provides information in a different format. But I like to see, I personally, this is a format that I like. I mean, you can find different ways to find your budget, but I personally like a format in which I can see my accounts in one section, and then I can see also my months. So I have a visual imagery of what's happening throughout the year in all different transactions, and I can probably foresee what's going to be the remaining of the year. And at the same time, I can work based on my data from last year or from the years before on a budget. And I can see if I'm making any progress or if I'm not making any progress. So for example, this is an exercise or a sample that we can review together in this simple analysis. Let's say this is the actual numbers for this year. And I've been tracking my book sales, and I've been selling $13,000 in January, $12,000 in March, 13 in March, 10,000 in April, 12,000 in May, 11,000 in June, July 10,000, and August 10,000. Obviously, with this sequence, I can foresee that in September, October, and November, and in December, probably my sales are going to be more likely similar. They're going to be between the 10 and the 12,000. But probably if I go back to previous years, I can see that probably there's a dip in November, December, because everybody is out of town, or probably is a push, and it jumps from, instead of selling 10,000, may go to 15,000 or 20,000. So assuming that I am new to this business, and I be trying to keep record of my sales. I mean, of course, this is October 10. I haven't updated my numbers for September, but assuming that I have updated my numbers in September, I can foresee, or I can create what's called a forecast for the rest of the 3 months. And I can see how my year is going to end, at least in sales, right? So I can start filling up the numbers, and assuming that I'm going to highlight this in yellow, so this could be my forecast, knowing that this is my actuals and this is my forecast, and that's why I like a little bit of Excel. I can probably then just make an assumption that September is also going to give me, I would say, $10,000 in revenue. And October is going to be $10,000 in revenue. And I can go in November, and probably, if I am new and I'm selling books, obviously November and December, we have good, strong retail transactions. So it depends on your business, right? It all depends on your business. You can see that I can probably go up in these numbers. And if my highest number were 13, almost here, 14,000 or 14,000, I can probably be aggressive and say, I hope to sell $15,000. And then in November, December, I would go more aggressive and I'm going to sell $20,000, right? So that's the purpose of tracking your numbers and to build a budget. Because then you can see your you can see how your revenue is gonna be impacted. And of course, I have the cost of goods sold because I'm selling books, and when I sell books, I have to include the cost of goods sold. So probably I would say if my cost of goods sold when I'm selling 11,000 is 6,000, so I'm gonna be put here $6,000 in my cost of goods sold. And of course another $6,000 cost of goods sold. And in December, I can probably do maybe $7,000 to $8,000. And in here, I will put $9,000, right? So I have an idea of how much it's going to be. And that's my revenue. And then I can go with my expenses. I mean, of course, this is just an exercise, and that's the purpose of the exercise, right? It's just a forecast. It's a forecast for the remaining of the year in case I am new to this industry. And then the same thing on my payroll. I go with my expenses. Each one I have the actuals because I've been tracking the actual numbers. So then I go in September, October, November, I can finish the year and I can see, I mean, the purpose of this is by the end of the year, when I finish my year, there's something important is happening for the next in April, right? I need to pay taxes. I need to pay taxes on the money that I make. So if I can foresee how much money I'm going to make, especially if I'm keeping track of every month, I can see I'm going to finish my year. And if I'm going to lose money, I'll probably need to start taking some action to start being how much I can probably. If I'm making a lot of money, how can I probably find ways to use that money for other benefits for my business that can be deductible, that can be deducted from my taxes, or probably start supporting a club or a nonprofit organization that also at the same time benefits the interest of my business. So that's pretty much the exercise. And again, we go in the payroll and we go by line, and this is what I like about Excel, that I can go again by line, each one. I can record all the transactions that are by month, and I can just finish. I mean, it will take me probably 10, 15, maybe half an hour, depending on the complexity of my business. Some businesses are much more complex than others. Others are very simple, but if it is a very complex business, it may take me more. But we can see that right now. We can just plug in numbers, and I know that my payroll is about $8,000, $9,000. So obviously, by September, October is going to be $8,000 on payroll, assuming that. I mean, there's a principle in economy and in business that assuming all things remain constant, because I know there's a lot of changes and a lot of unknowns, right? But assuming all things remain constant, probably more likely I'm going to have the same payroll. And probably in overtime, well, I can see why I had overtime here in this month. I mean, may have an information, but I know that probably, again, because this is assuming this is a store, I'm going to have more people for sales in November and in December. So probably I can increase my overtime here. And if in this one I have $30 and $52, I can probably put maybe $200 in October and November and $200 in December. Right. And the formulas are updating. I don't know if you see how the formulas update automatically. You can do that. Office supplies, well, I can see how come I didn't have any office supplies in the rest of the month. So probably, I don't know if this $200 that I spent at the beginning of the year is still, available. Probably I need to spend more. And I can go to my my warehouse, then probably say I need more $200 on office supplies, and so on and so forth, right? Just I start working on my forecast, and the maintenance supplies, the same thing. I can finish the year by probably adding, I mean, I see here 200, 1,720, 300, 800, 400, 250. I can probably be sensitive to put 250 at least, or maybe 500, but I can put 250. In this one, facility repairs maintenance, there were 200, 1,000, 400. I mean, I can see I can probably put maybe $500 every month, depending on how aggressive you want to be or how conservative you want to be. But and you have to understand, this is knowing about your business, right? You need to know why you spend $1,400 or $1,300 here instead of $200 here and nothing in here. If you keep track of your information, it will be easier for you to finish this forecast in more reasonable, more accurate. The water system was 600, and then nothing here. Probably I just put another 500 in the same October. Alarm security obviously is a quarterly expense, so I need to put the 244 here. The equipment rental, there was an equipment rental. Looks like every quarter I rent an equipment, and it's about 1,700, 1,500, and 1,400. So I better put 1,500 here. Now, now you can see I'm putting all the numbers in the month of November. Maybe I can play with the numbers and move them around. Maybe this 500, put them in December, of this 500, put it in October. But the purpose is just you see the development of your business, and so on and so forth. So at the end of the year, you can see how much you're going to be making or losing money. If you're losing money, then you can see, wow, I'm going to need a loan of $120,000 by the end of the year. So I better start looking for a loan and start looking for whatever I need to do. So that's the purpose of having some actual numbers, especially towards the end of the year when you are getting ready to pay your taxes. Because once the year closes, once you do the last transaction, unless your cycle ends in a different month, some businesses finish the cycle in July 31st, the last day of July, or June 30th. But if not, if most of the businesses close the cycle in December, every transaction that you do in January 1st does not respond to this year. So you cannot use that as a deduction for this year. So that to me, that is important. I can see how am I going to finish the year in my numbers, and if I'm going to be losing money, I can make probably. It's good, because if I lose money, then obviously I don't pay taxes, and I can probably use this. This will help me that I'm not going to pay taxes because I'm generating a loss. Or if I'm generating a profit, I can see what else can I do to pay the least taxes. And remember, deductible. Every cost of business is a deduction that I can put within my income for my business. And that's why it's called deduction. Deduction is like deduce, is like reducing the amount of your profits or your sales. All this below the line, all these expenses are deductions, as long as are valid expenses for the business. Right. If I have travel expense and I went to Hawaii just to have vacation, and I use the credit card for the business, I mean, that's not a valid deduction. It's not related to the business. However, if I went to a conference in Las Vegas that is related to my business, and I had to learn more about my business, that probably more likely is going to be a tax deductible item. So all depends, that needs related to the business. Many people buy a boat, right? I buy a boat for my vacation and to go to Santa Catalina Island, and I bought a boat of $10,000 or $5,000 I want to put in my business. Of course, that's not a valid expense that is deductible for your business. But if my business is fishing and I need a boat to continue fishing, then that is a valid expense for your business. So all that depends on the relation of your business. Now, when we go to budgets, when we talk about budgets, It's pretty much what we did with the forecast. I mean, this is my forecast. I highlighted in yellow that I know that it is my forecast. But when we go into budget, it's pretty much the same thing. Instead of putting the numbers in, instead of putting the numbers for September, October, November, December, I need to put them for the year. And here are my right, and here I can see the same thing. You know, my numbers for the year. I can see my sales revenue, but instead of putting, what I'm using is my experience from last year, which is 13,000, 12,000, 13,000, 10,000, 12,000, 11,000, 10,000. Now I'm going to use my budget to put an estimate on the numbers that are going to guide me for the rest for next year. Again, this is a roadmap that I'm going to, assuming everything remains constant, I can work on my budget, and I can say, well, probably I can sell a little bit more this month, right? Or a little bit less this month. But you basically are copying. I mean, you're not going with the same numbers of last year, but last year numbers, right? Or this past year, this current year that we just finish here. I'm using these numbers as a reference. I mean, these were actual numbers, 13,000, 12,000, 13,000, and 10,000. Well, I can go down in my same sheet or my different file. I can go and start plugging in the numbers of 13, 13, 13, 12. And if I want to be aggressive and I say, well, I can really sell more because I know that I did. I mean, you know your business. So you can say, I really need to sell more in April, or I really need to sell more in March, or I really need to sell more in May, because I don't want to stay in the same pattern of the business. I'm selling 13,000, 12,000, 12,000. I want to go 14,000. Then you can put in your budget 14,000, but you need to know exactly what you need to do to sell those 14,000. And maybe on those 14,000, you need to sell something. I mean, maybe you're going to do some marketing campaign, or maybe you're going to do something different to make the difference. And that's the purpose of the budget. Not necessarily just to see how much you're going to sell, but what you need to do in order to make the numbers that you want to make. That's pretty much the purpose of the budget. How much you need to do what you need to do in order to make the numbers that you want to make. If you want to stay in the same rate, because sometimes businesses are very busy and sometimes everything is complex, maybe you want to stay where you are. Maybe you just want just like an idea, just to take it easy because you need some help, or you're overwhelmed with what's going in your business. You can just be conservative. But if you want to be aggressive, says, I don't want to be in 13. Probably in May, in April, I need to sell $15,000. So this is where you start making your decisions as a business owner, because you are reviewing what you just did last year. You just monitoring your actual numbers. But now in your budget, you're changing your attitude and say, I'm going to be a little more aggressive in this month. I'm going to put $15,000 in April, and I want to see if I can go to $15,000 in May. So now, as a business owner, what's going to happen? You're going to say, well, putting numbers right there is very simple, right? It's like I can put the number that I want, but then I need to see, what do I need to do to sell those $15,000? And of course, your cost of, in this case, they're books, right? You're selling books, so you obviously the cost of goods sold are going to increase, because the more you sell, the more you need to spend. So I need to make this change. I'm probably instead of 6,000, I can probably put 7,500. Or there's some formulas that you can read within your budget. You can see how much is the cost of goods sold. And then probably your salaries and wages. Can you keep the same salaries of people? And it is in here where you see, well, I have my staff, and yes, probably they can do it. And if you start making decisions on how you can make this project, what you need to make these numbers to happen, and you can say, okay, yes, my payroll, I think they can stay with what we need. Or no, probably you said, no, I probably need to hire another person to make the $16,000 or the $15,000. And this is precisely the game. But it's not a game, but this is the exercise when you work a budget. But to work a budget, you need to have in your previous, you need to work your budget based on something, which is your actuals. Because in your actuals, you see your salaries, and you know exactly why in this one you make 7,000, and this one you make 9,000, this one makes 8,000, and you can say, well, probably I need to make, instead of in my budget, instead of being 8,000, I put 9,000. Do I need more? Another employee. If I need another employee, then you do the math, right? So it's going to be a part-time employee for $15 an hour. For 4 hours a week, whatever the calculation you need to put, and you plug it in, and it is in your budget, right? So for example, let's say we're going to need another person, plus I'm going to need another person for $15 an hour for 4 hours in a month. Oops. Right, so instead of 9,000, happens to be 9,250. So it's going to be 9,500 in my budget for 9,500, and so on. What else will I need to pay? Well, I'll probably need to pay. The security alarm in my budget is already there to 50. You see, the numbers are all rounded. The numbers are all rounded, except in this one. Probably I just needed to put 1,800. All the numbers are rounded, and they're going to give me overall again at the end of the month. They're going to tell me if I'm making money, if I'm losing money, and how much do I need for the year. And this is going to be my road map, and it's part of the business plan. It's a little bit of what we're talking about. Business plan is part of the business plan, because then this is the business plan, and you have a detail. You have a detail by your account, and you have a detail by your month. And you say, I want to increase myself this much. I think someone wanted to say that I wanted to start a new daycare, or I want to span a new daycare. Well, this is the exercise based on what you have in this, in your experience from the current to your budget. And even if you don't know anything much about the business, it is important to have a roadmap. It's important to make a budget, but at least have an account, a list of accounts. What else do I need? What else do I need if I'm going to start a new daycare? Well, I'm going to need I don't know, the water. You're going to pay water. You're going to pay electricity, or the house, the rent is going to be bigger, or you need to pay employees. Then this is where you start plugging in all the numbers and really see if you are making the money. And you can start with your expenses, and then you can realize, you go down and says, wow, my expenses are going to be total expenses are going to be $20,000. Then you can work way up, right? So I see that, oh, I need to my expenses are going to be $20,000. Then what do I need to do to sell $20,000? And then you build your way up, so you can make on your way up. So you can see that 15,000 is not going to make it. So you probably need to sell $25,000. And in this, I'm going to be maybe $9,000 out of cost of goods sold or whatever. And you work your way. You can work your way up, or you can work your way down. Way up is from your expenses. You see your expense line, and it's like, wow, I need to spend all my expenses are going to be $20,000. So my way up is, how much money do you need to sell to make those $20,000? And then you start bringing it down, divided it by number of children, either by hour or by day or by families. I don't know, depending on your business. So that's the way going up. From your expenses, you go and see how much you need to sell for revenue. Or you can go the way down, right? You say, well, I want to sell $30,000, $30,000. And okay, so what you need to do to sell $30,000, and just a little bit of what we're doing earlier before. You can go with your expenses. You can go to your cost of goods sold. You can go with the number of employees that you will need to buy to do this. You can go with your marketing. Say, so I need my marketing. I'm going to need this much, this amount of money. So pretty much that's the purpose of the budget. And as I said, I personally, I mean, everyone can have its own way of doing the budget, but I personally like this format because I have on one side, I have all my accounts. I can add the accounts and they say, oh, wow, I forgot, for example, I forgot the rent. Okay, I don't have rent. I can insert my rent in here and I can put my account rent, and I can it's going to be $2,000 a month for rent, and I can put it, it's something very visual and affects me. I can see by month and by account, and by month. The purpose of seeing it by month, every year has a cycle. Not every month is the same, and not every business behaves the same on every month. For example, in January, we know that retail is almost dead. But probably in January, I mean, I don't know, the schools, everybody comes back from school from vacations, right? And the people go back to school in January. Or the summer, or we were talking about November, December, right? If you're in retail, that's supposed to be the most busiest day of the year for retail. And probably for schools is something normal, right? Or the summers for schools, they're dead. They're dead, but the summer schools, they're not that busy unless you have a summer camp. And then the summer camp, do you make as much money as you do when you have a summer camp than when you have a regular month? So those are the components that I can see when I see my months. When I see my months, and I can see my months and my expenses by month, but throughout the year, and that will allow me to say, well, I need to sell more on this month. I need to sell more. I need to do this, and that's, to me, that's the purpose of a budget. And but not only to make a budget, but to use a tool that is going to help you visualize what you're doing and what are you working for. Now, Excel is very versatile. And if you have any questions about how to use it, or how to create this type of charts and how to make it, to add automatically the formulas, like for example, here I put 5,000 and it automatically changed me from my formula here to 15,000, and probably here for the year change everything. If you want any of this, any training on this, you can contact us. We have staff that have some expertise in Excel, and they can help you work on this program. Again, some accounting software may have features of budgets, but the software may not be visually friendly. The subject may be the end result may be a little not visually friendly, as I mentioned here. So it's something that you have to explore based on what you want, where you want to be. Are there any questions or any comments on the budgets? And with this, I'll stop about budgets. Or questions in Excel. As I said, you can contact Gabrielle, you can contact me, you can contact the center, and we'll give you support on how to build your Excel spreadsheet. So if you don't have, depending on your business, obviously the businesses, if you don't have a business, I mean, if you have an accounting platform, or if you have an Excel, I mean, I recommend it.
Gabe, I do have a question.
Yes, I'll go ahead, Guadalupe.
My question is, so I am really interested in doing Excel, or I'm in between QuickBooks, but I really like how you do it through Excel. But I did my laptop just broke down, so I am in the hunt of a new one. And my MacBook was not really liking Excel or none of that. So my question is, what laptop do you recommend?
Can you repeat your question because you were a little it was not clear.
So my question is, what laptop do you recommend or works good with Excel?
You know, they're two different. I think I understand your question. You're asking which one I recommend, QuickBooks or Excel?
No, as a laptop.
As a what?
Laptop?
Oh, a laptop?
Yes.
Oh, okay, okay. Yes, definitely. I recommend a laptop that is instead of a tablet. You know, the tablet. I don't recommend tablets because when you're doing business, you need to have the entire visual. You have to have the size of the screen. So I probably would select a tablet, a laptop that has the widest screen because you're going to see a lot of information. The smaller the screen, the smaller the information you can see. The wider the screen, the better you have more visuals in your on the screen. I would go to Best Buy and say, you know, I'm going to use my computer for data. Excel, you need a good computer, a good processing memory. Because you use a lot of numbers in Excel, use a lot. So they will tell you the recommendation, which one will be. I mean, sometimes maybe a Dell or Hewlett Packard is more than enough.
Okay, so I'll go ahead and email you once I have it so you can help me more on the setup.
Excuse me?
Sorry, is my audio not working good?
This is coming a little, if you speak slower, you can understand better.
Oh no, I just said I'll go ahead and email you once I have it so you can help me with Excel.
Oh, okay. Yes. And you can contact the center. We can coordinate that, and we can help you set you up. It's not complicated. I mean, once you get familiar, it's very friendly.
Can I just jump in real quick, Gabe, and say don't get a Chromebook because it's harder to use Excel with a Chromebook.
Oh.
Thank you.
So I have that problem too.
But on the Chromebook, you can use numbers and it works really, really well. And it's very similar to Excel. I do everything on numbers.
Nice.
Yes. I think it is. Yes, it's called numbers. I use it on. We use it on Google Drive. Google Drive, I think, brings numbers, and it's also very similar. But good. Are there any other questions? And let me tell you, I'm not expert in Chrome. I'm familiar with Excel, and I feel more comfortable with Excel because there are a lot of features that I know. I would say my expertise in Chrome is limited. It's similar, but I know it's just a different program. It's like Windows and a PC. There's the system is very similar, but it's a little different tweaks that you have to navigate. So, but we will help you either way. We have members that can help us.
Okay, sorry. Let me take back my comment. Numbers is on the MacBooks, not the Chromebooks. I agree. Don't do a Chromebook with numbers. Or don't do a Chromebook for Excel because the Chromebooks are designed for all like Google Doc things, and the Google Docs version of Excel is garbage.
Oh, okay. Good. Yeah, and I'll share my screen so you can see a little difference. Let me see if I can get by using a PC.
Mr. Gabe,
Yes.
what brand of laptop do you recommend better to buy?
I mean, any laptop is good. I don't have a recommendation per se. Any laptop is reasonable. just go when you buy it, make sure that it says that you're going to use Excel. And here's the Google Drive, and that's what I was referring to. This is Google Sheets. You know, it's pretty similar. You know, it has the columns, and it has the rows, and it has similar features. I would say very similar features to Excel, but I don't like it. It's very slow and it's more limited. With Excel, you have a lot of versatility. It's very familiar, and you find it in your Google Drive. I mean, every time you find Chromes, you find it in your Google Drive, and the Google Drive is very. Oops, let me see. I just lost my. It is in, oh, here it is in your, when you go in this 4 points of your Mac, you can find Drive and you can find Google Drive, and you can export Excel documents into Google Drive, and from Google Drive you can export from Google Sheets. You can export into Excel, but you have to sometimes reformat it again. But I'm not an expert in that. Anyway, so the purpose of the class today was to talk about a little bit about taxes, and believe me, I think you know more than I'm not a tax expert, but I'm going to share with you what I have in the class, what I prepare in the class, because I work in from the business perspective. I'm just basically from the business perspective. What you're going to be facing when you talk about taxes, and obviously the taxes are, it's just like a fee. Even when we go to a club or become members of a club, or even with the church, or well, not the church, it's a little different, but you know, social clubs or golf clubs or swimming, a gym or anything, we have to pay some fees to get access to certain benefits, and that fee is pretty much a tax. That's what is called a tax. But now taxes for governments or for entities, for communities, they need to raise those to provide public services so everybody can benefit from them. And how does the government in this country gets taxes from? Obviously, one is the income tax. One is the income tax from an individual, or from taxes that we get from our business. That's an income tax. The business makes money, and as the money, we have to give our fees or taxes or fees to the government, the city, the community, the state, so they can provide public services. And we see this in the schools that we take our children to, in the roads that allow us to go from San Diego to Las Vegas, or from at the airports to easy take a plane from San Luis Obispo to Seattle. And many times, you know, the capacity that we have internet in a small community of 20,000 people, we have internet. I mean, the internet would not be easy if they would have to put the trenches where there were no roads. But because there are roads, it's easy to build the trenches and build all the materials and the equipment close to the roads, so they can build the passage to the internet, right? Even though it's a private company or it's a public company that provides the services. So those are the public services that we get. The hospital, maybe not hospitals, but I mean, there's a lot of hidden benefits that we in this country receive from taxes. So the income tax is probably the most common, but many others can be collected either by payroll or by commercial transactions, right? For payroll, when we work as an employee or as an employer, we collect the taxes of the employee, and we as an employer, we have that money that belongs to the government. We have to give it back. Or by commercial transactions, if you go to this grocery store and you buy something tangible, then we pay, you know, some taxes. So basically, when this happens, even by income or by collection, either by transactional payroll, the taxpayer technically has goods that belong to the government. So has goods that belong to the government, they're not ours. So that's why the government is very serious about collecting taxes, because it's money that we owe them. It's money that is part of the membership fee, right? Nothing is for free, so I can be part of I cannot enjoy the swimming pool if I don't pay my fee to join the swimming pool, and if the swimming pool is clean, then I cannot. I mean, I have to pay for the swimming pool to be clean, and the club needs to pay for their employees to keep the swimming pool clean. Similarly, is the purpose of the taxes. So it belongs to the government. So the government can really come after us if we make some mistakes on trying not to pay taxes, because this is the cost of being in a community. And it's sometimes it's like a civil duty, pretty much, to support the community that benefits everybody. Is what they call the common good, in a way. So when you have a business, in case you are a business owners, right, you can collect business by I mean, none of you, well, I don't think none of you sells business with a tangible purchase. All of you provide a service, so you're not going to collect anything unless, for example, you sell a T-shirt with your logo, and because it's a tangible purchase, then you have to collect taxes for that item. Or you probably sell a mug with a logo of your school, then you have to collect taxes because it's a tangible transaction. So when it's tangible transaction, you give something to the consumer, and the consumer pays you back. And there is, in that transaction, there's a tax. There's a tax that needs to be collected, right? It's called the sales tax. If you don't sell any kind of paraphernalia about your school or about anything else, you don't have to worry about it. But if you sell T-shirts, hats, mugs, anything that is tangible, you have to collect sales tax. So you have to make sure that you have a sales permit and a sales tax. If you provide services, most of you provide services, you don't have to collect tax. Don't worry about this. Sales tax, you don't have to pay sales tax. But the same thing, if you have employees, you may not have employees. If you don't have employees, you don't pay taxes. But if you have an employee, and that transaction of employment, in that transaction for employment, there's also a tax. And that's the tax for employee taxes. They call the payroll taxes. And the payroll taxes is simply the taxes that we collect, and the employee and the employer participate in this deduction of money. So the employee can have, for the state, unemployment in case the business goes down, or in case there's something that happens, like happened in the pandemic, or there's the unemployment tax. I mean, the unemployment, he can collect employment, or he can collect disability benefits in case there's a problem with an accident with employment and within the work that he's doing for us or for someone else. And for the federal, it is pretty much for the retirement, where people are old. When people are old, we know that we diminish our ability to see, our ability to read, our ability to remember, our ability to move, our ability to do most of the things that we used to do. But we still need to have some kind of income, because we cannot buy the food right now that is going to give us the food when we are 95 or when 85. So we need to still have the income for a couple of things, for health insurance, for other things. And that's the income that's the tax that we collect for Social Security, to support us when we're older. And we're going to talk about retirement plans, and we'll see that, I mean, it's Social Security is kind of a retirement program for in this country for us. And then, of course, you have your income tax. Your income tax as a business, your income tax is pretty much what you sell, your sales minus your expenses. That's your income, your profit and loss, right? That's, you make money or you lose money. So if you make money, you pay taxes. If you lose money, you don't pay taxes. You can probably get a credit for your taxes. And this income and loss, you reflected on Schedule C. And as an employee, that transaction, those commercial transactions is reflected in your W-2 or the W-2s. You have to provide a W-2 to your employees, or if you have work, and if you're an employer, if you're an employee, you get your W-2, and that becomes your income tax. This W-2 becomes your income tax, or this is Schedule C income. So your Schedule C becomes is what it is. Is you reflect that in the Form 1040, in the Form 1040. If you have it's 1040. If you are well, I think I'm a little ahead. We see so let's say, for example, your daycare is the Three Little Bears. You're going to have income because you're going to have people coming in, and you have your students. You're going to have expenses. If you to yourselves, you reduce your expenses, you're going to have a profit and loss. And that profit and loss, basically, that's going to be what you put in your tax declaration. You declare your taxes based on this profit and loss. If you're a sole proprietor, you're going to reflect it in your Schedule C. And this is, I'm a little, again, I'm not a tax expert, right? If you're a partnership, an LLC, or a corporation, you don't use the Schedule C, you should use what I call the Schedule K. In the case, which is the same thing, is what your business made, or what income did you receive from a different entity that is not you. In this case, you're not sole proprietor. And but many times, sometimes they ask me, and this is something that I want to bring up in this call, because they say, well, but my husband or my wife works has a different business, or my husband has a different business. Well, when you are your spouse, let's say your spouse works in Walmart, because he works in Walmart, he's going to receive a W-2. And because you're married in the state of California, I think the state of California is joint property, is common property. Both of them are going to be W-2 on your Schedule C, or this or her W-2 and your Schedule C or K are going to be added up as family household income. And that family household income is going to be part of your income for part of your personal taxable income. If he has a business, the same thing. If he has a business, then he's going to have either the same thing as a business. If he works in construction, he's going to have to represent Schedule C and Schedule K together, and that will be the family income. So it depends either way. If he has as an employee, he will receive his W-2, and that W-2 will be added to your joint taxable income. Or if he has a business, he will have exactly the same thing. He will have the Schedule C or Schedule K, depending on how his business is set up and how his business is structured. If it's a sole proprietor, or if it is a partnership, and it's going to be added up as an income for the household, and that's going to be the income subject to income tax. That's the income subject to income tax as a person. So pretty much you're going to have, it's just not that you have double taxation. Is something that you as a business, you have to be taxed. And as a Schedule C comes part of the household, and as a corporation, the corporation will be taxed also on the income, but you may not be taxed unless you get some dividends of some of the stocks that you sell, and they become part of your income. So pretty much, I think that's everybody must. I assume that everybody's familiar on how taxes work. Now there's another kind of tax that we pay, especially as businesses, that not necessarily goes directly to the federal government or to the state. It goes to the city, and it is the county assessor, or the city assessor, the county assessor. The county has also a property tax. That is another way in which the county collects taxes, and everyone who owns a house knows that the property tax, it is tax estimated on the value of the things that you own. So every year, the city probably will send you a form if you have equipment, if you have machinery, if you have probably for small daycares, it may not be necessary, it may not be critical. But for example, if you have a business where you have a big playground, where you have refrigerators, big refrigerators for your school, or maybe you have copy machines and all this property, you may receive a property tax schedule for your equipment. So that's I would say the fourth tax that you're gonna be liable for. And then, of course, there's another tax if you're a corporation, LLC. That's a fee that you have to pay every 2 years, or every year. I think it's every 2 years. If you're an LLC or a state or corporation, you have to pay to the state, and it's considered a fee, but it belongs to the part of the taxation, the taxation department. So pretty much those are the four taxes. You know, the tax that you have to pay for sales transactions, the tax that you have to pay for if you have employees. If you don't have employees, you don't pay taxes. And the tax that you have your income and your expense, your income from your business, and the this property tax that you have to pay for property. Now, I'm just gonna go real quick on some forms just to get familiar with some forms. I'm sure all of you, or some of you, know them better than I do. I'm sure. Let me see. Look, there they are. So, and again, I'm going to review this from the sole proprietor. Those that have corporations or LLCs, they probably have different. I'm not. There's other schedules that I don't have copies of them, but I will do it as. Well, probably you're familiar with them. So the first one is the form the 1040. Everybody knows this one. It's the one that we use for taxes. And it is simple. It is very simple. Pretty much you have your information in here. But the key for us to understand is that we have line 8. I think it's line 8 that says other income from Schedule 1. Other income, it is pretty much where you're going to put your income from your business. There's another section for qualified business income deductions from 89.95, which that's for other kind of business deductions. But for us, and in the business of daycare and small business, this is where we need to pay attention. Other income in Schedule 1. So we go to Schedule 1, and when we go to Schedule 1, this is where we see on line 3, business income or loss for Schedule C. So for us, that's where we see that's where we put our the information of Schedule C. I think somewhere there it is for right. So from the 1040 we go to the Schedule 1 that says business income is going to be for your based on your Schedule C. And then if we go to Schedule C, If we go to Schedule C, pretty much is an income statement. Pretty much is a little bit of what we saw in the in our budget. We have the information of the business owner. It will ask you if you have an accounting method of cash or accrual. I mean, that's something that you discuss with your accountant. More likely because the small businesses, very small, the majority of the small businesses are a cash accrual. That means the expenses reflected and there's recognized the month in which was incurred, or the sale is reflected in the date which was incurred, as opposed to accrual, which accrual is, sometimes when you have invoices or when you create some it's a little more complex when you create invoices, or there's products that take time for you to sell because of the inventory, but more likely is going to be cash, where you can ask this for your business to your accountant. And then pretty much is part one, income, which was the first section of our budget. Remember, is income, is how much money we receive, is how we receive. And here's your income, the gross receipts. Now, for most of us, we don't have cost of goods sold. Cost of goods sold is the cost of materials that we have to pay for selling them. So, for example, let's say if we sell, I was saying we sell T-shirts, right? We have a store in our business, in our daycare, and we put T-shirts and we put mugs. Because we have to buy the mugs and we have to buy the T-shirts. The T-shirts, we didn't do them, we didn't make them. We have to buy them. We have to pay for the cost of them, and that's what is called the cost of goods sold. That's why we have to put the cost of goods sold, how much it costs us to buy the materials that we're selling. But because the majority of us, we just are providing services. There's not a cost of goods sold, and pretty much is the subtraction of your money that you make minus the cost of goods sold. You have returns or allowances. This is for other kind of businesses, right? For retail, for food, or for retail marketing, retail. But at the end of the day, you have how much you make for the year. This is your gross income. This is how much you say that you sold for that year. So let's say we have, I'm going to say $10,000 here for the year, and I didn't have any sales income, my $10,000. Then, just like we did in the budget, exactly the same thing as we did in the budget, and pretty much you can copy the budget from this form if you don't have any, or if not, your accountant can give you the information. But here it is, my expenses. Here are my expenses. And what are the expenses that the federal government is already telling me that are deductible from my business? You can find them here. Advertising. Did you pay for advertising? Did you make business license? Did you make a flyer? Did you run a post on Facebook? Did you put an ad in the newspaper? Did you put anything about advertising? You call people to answer the phone. You put advertising. Car and truck expenses. A little bit, we talked about this last session. If you're a sole proprietor, depending if your business is if you have a car that is dedicated to the business, in this case, if you take kids to the daycare, or you take them to they're your students and you take them to the park, etc., that's something that you can use an expense on your car because your car deteriorates and whatever. Commissions and fees, if you pay commissions. Contract labor could be a plumber, or it could be someone that is a contractor that you have. Depletion, this is kind of depreciation or inventory that depleted. Depreciation, and here you can probably put depreciation of your house if it is part of your business, but you can check with your accountant. Employee benefits, we're going to talk about that if you have an employee, but most of us, we don't have employees, but if you have employees, and this is also safe as a sole proprietor. Insurance, your insurance, you pay insurance for your daycare, you pay insurance for your house, and the parts of the space of your house that you're using for daycare is part of, you have to also share that cost of insurance for your house in your taxes. Interest, this is if you pay interest for loans, it's part of an expense of the interest. Mortgage, interest or mortgages, professional fees, office expense, pension and profit plans, rent, lease, the rent of machinery, equipment, other business. Let's say you went to Home Depot to rent a vacuum cleaner. I mean, you can put it there. I mean, it's just part of your office maintenance, repairs, maintenance, supplies. Supplies, let's say something that you use every month, that you use every most of it is used within a month. Taxes, licenses, and here, you know, the taxes are going to be for some the taxes that you pay for sales tax, or the taxes, travel, meals, travel and meals. And as I said, you know, depends on how you use your travel expenses. It has to be related to the business. For example, you're going to meet with Association of Teachers or the daycares that is going to take place in Palm Springs, and you go and you do the travel for that expense. You know, that's a business related expense. But if you go to Palm Springs just to spend vacation, you know, that's not a travel expense. That's not a business for the deductible for your business. So travel expense, utilities, glass, power, light, electricity. I'm sorry, the same thing, power, light, electricity. Gas, water, sewer, wages, all the employee wages that you pay. And taxes, and here in taxes are the employee tax, payroll taxes that could be broken down if you want, all the wages. And then you just, and here it says total expenses. So if I put, let's say I'm going to put $500 in advertising, I'm going to make it very simple, right? $500 in advertising, and I pay $500 in insurance, and in repairs I pay $3,000. And my utilities I pay $1,000. You know, I can copy this numbers from my budget, right? Basically, if I did my budget, I can just copy them directly and I can classify, I can make my budget based on these numbers. So then I have 3, 4, 5,000. So my total expenses were 5,000. Obviously, if I make 10,000 minus 5,000, my net profit and loss is going to be 5,000, right? And that's pretty much my income statement, right? I can copy it from my budget. I can copy it from my project, and of course, here are some other more things for accountants. You know, if you want, you know, other things. Cost of goods sold, there's a section of cost of goods sold that you can help. Okay, it can help in the cost of goods sold. So you can see the instructions. But even in part V, if you find any other expenses that you didn't see classified here, you can add them here if you want. And this other expenses really need to be, as I said, not included on lines 8 to 26. These other expenses, you know, they have to be either that within your classification, you were not able to find them in here, because in here, most of the expenses that you're going to need for your business are already listed here. Most of them. So all you need is to restructure your income, your budget or your accounts, either to match this or this to match your budget. Or maybe some lines in which, for example, you put utilities, right? You put in your budget, you have a line for cable, you have a line for electricity, you have a line for water, you have a line for sewer, or in your repairs, you have a line for plumber, and you have a line for legal fees. Well, legal fees are already here, right? So you can just add them and put them in here, and that's pretty much your Schedule C. So then you have your 5,000 that you owe. So you come back to Schedule 1, and it says from Schedule 1 attach Schedule C. I put my 5,000 here, And then I can go back into my form 1, and in line 8 for other schedule, from schedule 1, I put my 5,000 here, right? And then this number from my business is going to be added to whatever I have on my husband W-2 or my spouse W-2, whatever. It will be added to my entire income for that specific income statement. If you are a corporation on an LLC, you will have other schedules. Yes, Mindy, you have a question.
Yes, I'm curious to know if you have the answers on how to do the math. Because I run an in-home daycare, so I'm doing it out of my home. And I cannot just write off my full electric bill. I can only write off portions of it based on the hours and the time and the amount used. Do you know those numbers?
Yes, let me see here. Oh, yeah. Yes, I have it here. Hold on. Good question. So it's called the deduction for childcare cost. And basically, there are ways to calculate by the IRS rules. The first one is the space, and the other one is by time. Both of them are pretty much close. So by space, you have to select the exclusive use of the space. So you have to really measure with a measuring tape, the space, the exclusive space that you use for your childcare. The dishwasher, if you have the dishwasher, if you have the laundry, if you have, let's say you have a storage in your garage where you have all the toys, you have to square that, you have to use all possible space that you use for your daycare. But it is exclusive use. It's something that that you cannot sometimes it is and sometimes it's not. No, if it is exclusive use, you can use it. So basically you use your house total square footage, and you use the area used for exclusive use, your rooms, the storage, your cribs, the chairs. You measure this. Actually, you have sometimes recommend that you measure the chairs, the area that the chairs use within your living room, of the space that the crib. Let's say you have a crib that it is in a room that is mixed use, like you use it for TV, you watch the TV, but there's a crib there. You have to measure the space that the crib is using on that TV room, even though the TV room is for you, but there's a crib there that you use it during the day. But then you don't remove the crib at night when you go to sleep or when the kid leaves. You leave the crib there. So that's a little bit. The playground, everything. So then you have your space, all this is space that you use to your exclusive space, divided by the total square foot of your household, and that's going to give you a percentage. That's going to give you a percentage. And that percentage is the one that you're going to use to apply it for the electricity, for the power, for the rent, for your mortgage, for everything that it is used for your business. That you have to divide it. You use everything that as part of your space. The other option is by time. By time is now again the exclusive use of your time. The exclusive use of your time, and that's a little more tricky, but it's not. It's both. They're not tricky in a sense that are tricky. But the thing is, you need to measure them you have to have you have to record the measurements and have some background, right? So basically you divide the total year hours, which is 365 days times 24, you have 8,760 hours. So out of those hours, then you have to track every single time dedicated to every single activity related to your childcare. At what time do you open? At what time did you enter the time that you used to do the accounting, that you have to enter your bookkeeping, or your invoices or your billing? Every time you talk to a parent, right? You use the phone and call the parent. You track every single thing that you do for your daycare. If you have to pick up a kid, take him to the playground, or you took them to the movies or whatever, you have to take them. The moment you get out of the car, to get in the car, you have to track every single hour. You go and make a bank deposit. You go and make a bank deposit. It is time for your daycare. If you want to make a deposit, you went to buy groceries. You had to buy groceries because you needed milk for your childcare. Then you need to put the time that you use for groceries, telephone calls, billing, everything. So then you add all your total hours for the year, divided by the total hours for the year, and you get another percentage. And that's the percentage that you use for your rent, for your mortgage, for your house, for whatever. Either one of those work. As long as you have records of both of them, they will work. Does it make sense?
Yes, it does. Can you put that screen back up so I can take a picture, please?
Yeah. I don't know if there's anything blocking the screen. So that's what is the deduction of the childcare. It goes by the IRS rules. It could be IRS ruled by space or IRS ruled by time. If you get audited, as long as you have proof of this one or the other one, you're gonna be fine. They want to make sure every time we're audited, the IRS wants to make sure that we are not either saying that we spend more money than we are, or that we're not making more money than we are. So as long as you have the records and you say, there's a good intention, you don't have any mischievous calculations, as long as you say, this is how I do it, and this is my space, and here's a picture of my room, and here's the crib, and you can measure the crib. I use this, this is the square footage. You're gonna be fine. Or the other one, I mean, both of them you have to have a record. But I think the most practical for most people use the space, but this is also a good practical exercise. We have to write it down, everything, you have to track every single call. And many times, we're so busy that, I forgot to track the time that I was using. But both of them will work. And that's the percentage that you use for your electricity. Let's say your bill was $44,000 for $400, and your percentage is 10%. So $40 are going to go in your expense. So, and then there's another thing that I want to share with you in this one. It is the we talked about that on iSquare. I don't know if you've seen this application that is the automobile expense. The automobile expense is the use of your vehicle, right? The use of your vehicle to go to get groceries for the school, or to go to the bank, or sometimes you give rides to the students. What I recommend is the Mile IQ. Mile IQ, it is a very practical app. I recommend it. I recommend it because I've used it and I've seen it. Other people use it. It is very practical because it tracks it puts a tracker on your cell phone, and as soon as you get into the car, it's tracking the miles. You drive in the car, and if it was something that it was personal, at the end of the drive, you can just flip to the right or to the left. The mileage, like for example, this one, it shows you in this picture, it shows you the map, and it tells you the time, the miles. And if it was for work, you just with your thumb, you just slide the screen to the right, it goes for business. And if it was personal, you put it to the left. Just that's all you need to do. Just to the right or to the left, the right and to the left. If it's for business to one side, and if it's for personal on one side. At the end of the week, at the end of the month, at the end of any time, you can pull out the report, and it tells you how many miles you did it for your business and how many miles you did it for your work. And that's the one that you can use for tax purposes. And that's, I mean, it just tracks everything, you know, that you do in the car. And you can put probably, maybe you can buy another cell phone many times. How many times we have 2 different cell phones, right? You can use it, use it for that. It is very practical. It is very practical. I've seen it. It's very practical for both. Okay, so are there any questions about taxes? Are there any more comments? Any questions? If you have a corporation or if you have an LLC, basically the entity is going to be taxed as an entity, and you're going to be taxed if you receive a paycheck. You know, you're already taxed on your income, but you're not going to be taxed for any of the things that happen to your corporation. The corporation is going to be a different entity, and they're going to have tax. However, if your corporation gives you some stock, or the corporation gives you some dividends, then those are going to be added to your income as a person or as a family, and those are going to be taxable. And then you have a different schedule. Sometimes they put it in your W-2, or sometimes they give you a different schedule when you sell your stock, or when you sell when you receive your dividend, you receive another a 1099, and you have to put it in your taxes. Are there any questions, any comments?
Dave, I just had a quick question from a while back when you were talking about sales tax. If we were to sell t-shirts, if you did not sell them at a profit, if you sold them just at the price that you purchased them from, you know, the person that makes the t-shirts, do you still have to collect sales tax?
Yes.
Okay. Thank you.
And the sales tax, I mean, but you can go to the state of California. I don't know. Let me see if I can find the website. And you can go to the California Department of Taxation and Franchise. What's the website? Here's the California Department of Tax and Fee Administration, the cdtfa.gov. If you have any questions, there's a 1-800 number, and then just you know, every time you interact with a government agency, assume that they think that you're not doing the right. Well, it's not that you're not doing the right thing. They're there to collect taxes, pretty much, right? So you have to be careful how you word your question. You can say in the future, you know, I would like to sell this. What do I do? You know, always present your case in the future, in future tense. Always present your question in future tense. I don't know if you got the address. But yes, and then probably you need to have sales permit, and it adds more to your work. But technically, yes, you have to have a sales permit. Any other questions? Any other comments? Okay, if we don't have any more, I think the next class is gonna be communication with clients that will have a little bit more about marketing, customer service. And then session 5 is gonna be retirement plans. And then November 14 is gonna be a little bit about employee relations, a little bit of employer dynamics. So are there any additional questions? Any other comment?
I would like to know if you guys offer classes to learn like the managing on the programs for the computers.
I mean, we may not have the computer literacy, but we can give you, if you know how to use computers, we can help you navigate whatever application you need to work. Obviously, we give classes on Excel and Word and Office. Yes, basics on those programs. Yes, we do. We also have some basic for QuickBooks classes. We offer that too. For marketing, we use classes from Canva. So yes, I mean, depends on the program that you're looking. You can call me or send me an email what specific programs you want, and yes, we can do this. Anything else?
No.
Thank you.
Well, thank you very much for another hour and a half with me. I hope I was sharing important information for you, and thank you for all the good things that you do for all the students, all the little kids, all the little souls that are developing at this early age. This what you do is very important for a community and for the future of this world. So thank you very much for all you do. And we're here to support you in your business. It's not easy. There's a lot of distractions, a lot of headaches, but Michigan Community Services Women's Business Center always welcomes you and gives you the opportunity to tap on the talents that we have in our team of advisors. So thank you very much for another class, and have a nice evening.
Thank you, Gabe.
Thank
You.
you. Thank you. Bye.
Thank you.
Good night.
Thank you.
Oh, thank you, Millie.